Good day, good day, good day, traders, divergence traders. How y'all doing today? Hope all is good on the home front. Okay, let's get into it. So, look what we had here, eh? Chop, 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 chop. Chop, 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 chop. Chop, 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 chop. So much chop and no pop. Then it finally popped, eh? Yeah, that's two things you got in trading. Either you got a lot of chop or you got a pop. And a pop is when the price pops up. And the chop is when it chops you up like as if you're an onion. Okay, enough of that analogy, Jason. Okay, we're looking at the NASDAQ 100. But first, I forgot my but first. All forms of trading carry a high level of risk. So, excuse me, a little burp there. So, you should only speculate with money you can afford to lose. Meaning, don't go betting your rent money or your mortgage money or money you need to buy food or clothing or anything. Never, ever risk that money. You need to only risk spare money that you can afford to lose. Okay? And because, like they say, you can lose more than your initial deposit and stake. Let me give you an example of that. Okay? When I was trading the grain markets back in the day, back in early 2000s, I was trading soybeans. And I would be in a trade Friday, and my broker, Tim Hannigan, used to say, if you don't take it, the market will. This is what he used to say to me. In other words, close the damn trade. Call up the trade desk. Close your damn soybean trade and take your $500 and be happy and shut up, and that's it. Go to work. Right? Did I listen to him? No. Stubborn young buck I was. No, I didn't listen to him. So can you guess what happened? Monday morning, it gapped open where I owed, not only did I lose the $500 profit that I had, but I also lost $1,000 on top of it. So as soon as you lose it, here they are sending you an email, calling me up saying, you owe us $1,000. And I used to say, and they'd yell at me like as if I wasn't going to pay them. That's the idiots they were. And I said, yeah, just relax. I'll get you your $1,000. I'll wire it to you. You'll have it by tomorrow. Okay. And they'd shut up. And I'd wire them the $1,000 because, it went in the red. And it hit the margin call. So then they close your trade. Yeah, good old margin, eh? Good old margin. So it's a lesson, that you can lose more than what you have in your account. If you just want to quit trading after that and just run, you can, but it's going to screw up your credit rating because they're going to send a third party after you to try and get their money. And, and there's some craziness happening right now. I just want to warn everybody. There's crazy shit happening right now in Israel and whatever, and the whole damn system. Something bad can happen soon. So that's why you really got to be careful. Don't leave any open trades over the weekend, Try and, until this shit passes, I don't know when it's going to pass, another month or two. You got to trade very small because you could get in trouble, and you could your account could go in the red, and then you owe your broker money. But anyway, not that I'm a financial advisor, because I am not. I'm just saying as an example out loud what happened to me in the past. Okay, and it happened more than once. I'd owe them $1,000. I'd have to go pay them. I stayed in the trade, and it took me about 3 or 4 times before I actually learned not to leave trades on over the weekend. I don't, that's why I just day trade. I don't freaking you know, swing trade, because you got to leave them on over the weekend. You know what I mean? And shit can happen. So please realize you can lose more than your deposit and stake. And please ensure you have chosen a method that matches your investment objectives, and familiarize yourself with the risks involved. And if necessary, seek independent advice, as I am not a financial advisor. Okay? I'm just telling you some past experiences. I'm not telling you what to do. I'm just saying it out loud. So I had to read this disclaimer to you, because who knows what can happen in the future. Okay, so let's carry on here. Carry on, Jason. Okay. And what do we have down here? We have like it's like a, how would they call it? It's like a bullhorn or something. I've seen somebody draw it for me before. I can't remember. I know it looks like a channel, but it's like a long bullhorn. See? Hello, hello. Anyway, was there divergence down here? Yeah. Right here. This was the divergence. There was no news today, so you could have hopped in this trade right here where I'm saying, okay? So if you got in here, your stop would be down here. Did the price come down here? No. Did it come down here over here? No. What did it do? It went up 134 points from our entry point. That's what it did. And I'm not going to look at the 1 minute. Okay, let's look at the S&P now, ladies and gents. Here we go. Let me get a little water, aqua. Yeah, we have the same trade. We have a trade before it though, so let's check that one out right here. Double top. I thought it was a high and a high and a higher high, but it's not. It's a double top. Lots of double tops, in this business, I think it's so funny when people say, what? Look for double tops. What? Look for double top divergence. What? What? There's no double tops. Oh, yeah, there is. They're all over fucking town, man. They're all over the place. There's one right here. Okay, so if we got in here, stop would be S&P, yeah. 5 points. How much did it go down? 10 points. 2-to-1 win-loss ratio. Woo-wee, gotta like that. So we have a low, a retracement. Oh, my hand. Arthritis in my fingers. It just gave me pain. Oh, shit. I'm sorry. Oh, it's ever painful. So we had a low and a lower low, and we had a buy trade right here, and it went up 30 points, ladies and gentlemen. 32 points to be exact. So you definitely would have got your, stuff out of that. Oh, let's step back here for a sec. Right here. Actually, right here and right here, I forgot to talk about them. Lower close, but if you miss the entry over here, okay? Right over here, lower close, buy it, up it goes. Lower close, buy it, up it goes. Here's the easy one to see. Lower close, buy it, up it goes. I wouldn't do one up here after it started, topping out, because it's dangerous. It's very dangerous. You want to do the one, if you're buying, okay? You want to do the one that's closest to the bottom of the move that you're about to get in. If you're doing a sell trade from sell divergence, you want to do it from as close as you can from the top. It's a higher close. See, the market comes down like this, then it does a higher close. sell it, down it goes. That's where you would do the trade. Okay, you don't want to buy near the top. You want to do this at the bottom, as close to the bottom as you can, or somewhere in the middle. Like your first one and second one's good. Third one is getting risky, okay? All right, let's move on. And over here, we have, do we have any? Oh, there's one right here, but see, it's right at the, near the top. But it would have worked. So if you would have bought it right here, it would have went up 5 points, okay? But down here, see, they all close below the two moving averages. I don't know, kind of risky. Anyway, let's move on now to the Dow. Oh, look at the Dow flip-flopping. It flip-flopped on people. They got them all going, sell, sell, sell now, sell, sell right in here, sell now. And then they shot it up like a rocket. Oh, God. Oh, that must be one of the famous ICT three candle up. Yeah, it is. Let me draw it. Let me draw it. Just for fun. Because it looked like it worked. It looked like it worked, ladies and gentlemen. So you draw it. How do you draw it? From the low of the wick of the top candle and low of the wick of the middle candle? No, I don't even know how to draw it. Okay, hold on. I'm gonna, okay, I see how to do it now. Every time I try to do this, I forget how to do it. Here it is, here it is, here it is. Here it is, right here. See, from the top of the wick of the first candle, I don't know, ladies and gentlemen. Let's see. Maybe it needs to go right here. I don't know. We'll draw it like that because then we can say it worked. It worked. See, it came into the box. See, you would have bought right there, and up it goes. Yeah, I don't know. Anyway, it is what it is. Let's move on now. Let's move on to oil. Oh, oil, I see it. I see it. I see it down here too. Right here. Look at that. 1, 2, 3, 4. 4 touches. There's no divergence there to buy it. There's none. Scratch that. Let's take this up here. Like that. There. That's good. So you would have got short right on the opening here. Your stop would have been 34, 35 points. And you can see it went down 64. If you waited till the bottom, 91, you would have got your 2-to-1 win-loss ratio. All right, it was a good trade. It was a double top. Look at that, another double top. When people say, no, there's no double tops. Hold on, let's see. I think there's a trade over here. Not to buy it, but to sell it, there was, let me show you. We have a high, a retracement, and a higher high. Yeah, right there, see? Right there. That was it, that was it. Shh, shh, don't tell anybody. Shh. There it was, so we would have got in right there, ladies and gentlemen. Yeah. Right there. Would have got short. It's the next one, but anyway, close enough. Sell right there. Stop would be 35 points. Went down 60 points. That's a winner. Chicken dinner, man. That's oil, 5 minute. Okay, let's look at the pound now. What did it do? Right here. We got to show this trade too. We got to. And it's beautiful right off. They bought right off the main pivot of the day. And they brought it up to R2 so far, past R2. Come on. R3 is way up there. Okay. What the hell? Here we go. So it's right here like this. And right there like that. You would have got long right in there. Your stop would have been only 11 pips. And it went up 50 pips. Then we had a triple top. See that triple top? Yeah, another double top. Can't be, can't be. So many people tell me, nah, there's hardly any double tops or any double bottoms. No, they don't exist. I've never seen one. Oh yeah, they're all over the fucking place, man. They're all over town. Okay, ladies and gentlemen, and never forget it. Right there, I didn't draw it to the right line, but still right there. See, it lines up. Lines up. Here, I could fix it. Right there. So, you would have sold it right in here. And in my course, it teaches you from way down here, okay, that listen, a trade's going to be coming. You just got to patient. Be patient, grasshopper. Stay. Calm down. Relax. Have a cup of coffee. Wait for the setup. It told you right down here that soon there was going to be an opportunity to sell up here from either one of two things, from a double or triple top or higher highs. That's what it was telling you right down here. But if you look at it yourself right now and go, what? What's he talking about? Well, it's in my course. That's all I can say. Okay, let's move on now. What does this look like? It looks like a double bottom to me. We got one more. One more double bottom. Here, coming in, right here. Is it come and touch that? Does it have to come and touch us? No. Nothing's perfect in the world. I'm not perfect. You're not perfect. So no, it does not. So the trade would have been right here. But let me draw it on here first. Okay. Right there. It's that little beautiful little orange doodah. Okay. And we need an arrow. So you would have got long right there. Your stop would be right here if you wanted to risk a little more, or right here. Did this come to the stop? No, missed it by 2 pips. So if we would have got long right here on a pullback, it went up 19 pips. Okay, this is the pound dollar. And your stop was 9 pips. So that's 2-to-1 win-loss ratio right there. Okay, it's time to move on now to the euro, the last instrument of the day. I think I should probably add the pound yen and euro yen again since we're back on the Forex charts. Okay, why not, right? A little bit more to talk about for those of you who trade Forex, but I'm not going to get into the exotic pairs like the Euro Swiss or the pound Swiss or the this Swiss, or especially the Swissies. I don't touch the Swissies. And I'll tell you right here and right now, they really screwed people back in the day, like 10 years ago. If they think we've forgotten, I haven't forgotten. Do not trade anything Swiss in it. You can't trust them Switzerland people. You can't at all. Okay, we got a double bottom down here on the euro. See, right here. Boom, boom, or a lower low, whatever you want to call it. I call it a double bottom. And like this to this. Okay, and you would have gone in long. right on the UK Open, or close to it. Your stop would have been below the pivot, 11. Excuse me. Yeah, the Aussie's going higher now. Now that I'm out of it, let's trade in the Aussie today. That's the AU, Australian US dollar. Anyway, okay. So we would have got long right here. Our stop would have been like 11 pips. And it went up 46 pips. It was beautiful. And then up here, what did we have? Oh, it can't be a high, a retracement, and a higher high. Look at that. Can't be. And this going down like this. Oh, see, it didn't look like it was from the top, but it is. It's from that top. Oh, look what that needs to go way over here like this. Okay, see, lines up and lines up, right? Right. That's higher highs. And it told you from way down here, we're looking for a sell trade. Yeah, it told you. If you know what to look for. Like I said, it's in the course. It's in the course. Sell right here. You got about a 10 pip stop up here. And how much should it go down? 30 pips. Trading full lots, that's $300 each. Depends how many you're trading. So if you do 3 trades, three lots, 3 contracts, making good money. Making good money. And what do we have down here? Could it be another double bottom? Is that possible? I never seen one. Yeah, it's right here. Right there, man. Shh. Shh. Don't tell anybody. Shh. I'm just kidding with you guys. Come on. You must know my sarcasm humor by now. Oh, shit. You should see my brother Sonny. He's even worse than me. Oh, shit. Okay, there it is. Oh, I gotta put it down here too. Just like that. There's the divergence, ladies and gentlemen. Buy it right there. Your stop would be 12 pips. Went up 22 pips, almost 2-to-1 win-loss ratio. That was a beautiful trade, as you can see, and it did the chop here in the U.S. session. So anyway, just want to say once again, just getting my paperwork together. Once again, this is Jason Sweezy, and I like to trade divergence. Why? Because one simple reason. It really does work. So, thanks for watching and listening, and if you could be so kind to hit the like button and subscribe, that would be terrific. Because it's free to like, it's free to subscribe, okay? So, you just have to go tap with your mouse, and that'll make us all a happy family, happy community. So anyway, thanks again, and good luck and good trading. Have a great day.